Well, the countdown is on. The Federal Reserve expected to cut interest rates for the first time this year. But the big question for markets, how many more cuts may be coming? Welcome to the Big Money Show. I'm Brian Brenberg, along with my co-hosts Jonathan Hoenig, Lydia Hu, Jackie DeAngelis, and with us for the hour, Luke Lloyd. Welcome.
Hey, guys. Always glad to be here.
Well, for months, Trump has hammered the Fed for keeping rates too high, dubbing Jerome Powell too late. Some economists predict as many as 3 cuts before the year's over. Trump's new Fed pick, Stephen Myron, is expected to have a big influence on forcing rates down. So is the Fed about to act just in time, or is it too little, too late? Or I could throw a third category in there, Jonathan. That is inflation telling us we shouldn't have any cuts at all? I come to you first.
Well, look, one of the things inflation is telling me, in fact, inflation is going up, Brian. Price of gold, all-time high. But you're right, inflation, big picture, has come down. Look, the Fed, in my opinion, is always wrong. This is central planning come to interest rates. They create these booms, these busts. You know, for example, the golden handcuffs that we've talked about for months now, people unable to sell their homes because they're locked into these ultra-low mortgages. So I think the Fed overall is a negative impact on the market and the economy, but I do expect a quarter-point cut. They're going to go gradual, but they're going to cut.
What do you think about guidance on this one? Because everyone's kind of baked in the quarter, but the question is, what kind of guidance do we get? Does Jerome Powell say more rate cuts to come this year? What do you expect?
I think he'll throw it back on Trump and say the tariff uncertainty, which is something that Powell had cited previously, is one reason that they're going to have to take it slow.
Luke Lloyd.
So I think gold's at all-time highs, not because necessarily of inflationary issues. I think it's because of potentially some economic data like the jobs numbers, unemployment rising, some concerns out there, actually. I think inflation, for the most part, is beat. We take a look at every morning, and we release a newsletter at 8 a.m. It talks about inflation, it talks about liquidity, and it talks about growth. All three are looking actually pretty good. Growth looks good, inflation's looking pretty much beat, and liquidity is always going to be high because we have to spend $2 trillion, and his M2 money supply is really high. So for the first time in about 3 months, we actually started getting more aggressive on the growth side of the equation. Last time I was here, I said we don't own any big tech names. We still don't own many of the tech names, big tech names, but we do own some of the smaller tech names like Circle, Bullish, all these kind of names that, you know, some of them sold off 25, 30% from the highs this year. We're looking at adding more tech names because of the environment looking pretty good and inflation coming down. This is the best time in the history, I said, of the United States before, to start a business. AI, lower interest rates coming. I think this is very bullish for smaller cap names, especially in the tech space.
Jackie. It's a very dramatic meeting today.
It sure is.
Lisa Cook is part of that drama. But part of it, I think, is also what's Jerome Powell going to do in terms of the guidance? And, you know, he could say, look, we've got 2 more rate cuts coming. Maybe that could be what comes out of that. That's what the market expects after today. But he could kind of play the hawk, too, and not give a lot of forward indication of what's coming in terms of rates. Maybe just to, you know, could be political. Could also be because he just doesn't want to say it because he doesn't see the data there. What do you think he's going to say?
I think he's going to play his cards close to the vest. I think we're going to see a 25 basis point cut today. And Brian, to your point, I don't think there's going to be this crystal clear guidance of, okay, market, here are the rate cuts that are coming down the pike. Because I believe that he really believes his own narrative, which was that the inflation boogeyman is coming because of tariffs. And so I believe that's his truth. And so I think that his view on what's happened here wasn't that he's been too late. I don't think he would agree with the president or that he got it wrong. I would think that he would say, I've been cautious, and I've been cautious because I'm looking at other things that the president isn't necessarily looking at. So by that account, whether it's politically motivated or not, we can debate that. I don't think he's going to give away the store. I think he is going to, you know, maintain that position. I also think that the inflation picture, he's got to be more worried about the labor picture right now and all the revisions that we've seen in the labor reports recently. The inflation picture, I don't think, is as much of a story. We were talking about it semi-heated up yesterday when Charlie was here. And my argument would be silently, the Fed and others have adopted this idea that 3% is sort of the new target after Biden spiked us up to 9%. Hard to go back to 2% completely, especially in this environment.
Especially strong economic growth.
And with the growth. So I think that 3% shouldn't be too much of a worry. And you could argue with Powell that, you know, he's still worried about a boogeyman that just may not come.
Well, Stephen Myron is going to be voting today, going to be part of the rate decision, Lydia. And President Trump has said he thinks that Myron will have a big influence on getting rates down. Does his presence at this meeting sway the message we get from the Fed, do you think?
Probably not. I mean, although it's important that his presence is there, I can't imagine that if you're asking about the press conference coming from Jerome Powell, I can't imagine Jerome Powell is going to change what he would otherwise say because Stephen Myron is going to be there. In fact, I would expect Jerome Powell to double down on the way he would, just keep it close to the vest and not.
So he might have an influence on Powell, but it's the other direction.
Yeah.
Powell gets more hawkish or tighter because of Myron's presence. Interesting.
Possibly. But what I do think is fascinating is that, usually when you have these Fed meetings, we are so fascinated by the direction of monetary policy, and we're studying every word out of Jerome Powell's mouth and looking for what the Fed's next steps are going to be. For the first time now, we're not talking only about the monetary policy, but we're actually taking a closer scrutiny of who's actually voting, who's participating, and taking stock of that. And I think that's a really good thing. President Trump, for all the critics out there that accuse him of trying to undermine the weakness and make the Fed weak and undermine its independence, I think it's actually a really positive development that we're really scrutinizing who are the members of the Fed, who's actually sitting on the board and casting a vote.
It's a great point. They have 14-year terms. I mean,
Absolutely.
These people are there a long term. We got to know who they are, Jackie.
I just wanted to add a comment. Trump telling FBN that his Fed pick, Stephen Myron, who was confirmed, will, quote, have a big influence on too late getting his rates down.
Right. So that's interesting. And Lydia's theory is that might actually cause Powell to be a little more close to the chest, a little more hawkish, because he thinks he's got one of Trump's guys on the board. But Jonathan, I'm looking at markets. They're up today. I'm wondering if this is kind of a buy the rumor, sell the news situation. I mean, it seems to me that something big is going to have to come out of the Fed in terms of its guidance going forward for markets to rally on Powell's remarks. What do you think?
I have to say, Brian, you simply don't know on Fed days. There's so much uncertainty. There's a lot of money on the sidelines that waits to see exactly what that decision is going to be. It's why oftentimes when that decision comes out, you see the market swing, 300 points up, then 300 points down. So there's just a lot of money waiting on what this decision ultimately is going to be. And as investors, although as reporters we cover it minute to minute, I think as an investor you have to have somewhat of a broader focus. Markets have done well when interest rates have been higher than they are now and lower than they are now. So I think as an investor, you just have to keep that long-term focus and not get necessarily mired up in the minutia of the day-to-day.
Well, I love the broad focus there because I find it so interesting today. The RSP equal weight index is up like 0.6%. The Nasdaq's down 0.4. Then you have TLT long duration bonds up 0.3. So that tells me the market's actually thinking that the Federal Reserve is maybe not going to be extremely hawkish. They actually might be a little bit more dovish. So my philosophy, I love what Marcus, listen, when I'm not here, I still watch the show. So Marcus Lemonis, yesterday was talking about how, interest rates going lower is going to be bullish for small business, right? Because the large corporations, are borrowing all this money at high rates. They can, small business can't. So I think the breadth is going to widen out. Another stock we added was Dow, right? Dow Chemical, it sold off like 50% so far this year. I think the money's going to flow out of the big tech names, which is why we're still not buying the big tech names. We're looking underneath the small cap tech names, but also the breadth widening to the RSP index, I think, is still where the money's going to be. Today is very telling of that environment with the interest rate cut coming.
Jackie, we're watching the Fed so closely, but it's obviously part of a much broader story about growth in the American economy. Luke's making the case that he sees growth prospects being a heck of a lot stronger in the months ahead. Typically, that's not the kind of thing that would cause you to say we need a lot of interest rate cuts. The juice from the Trump tax bill coming through the economy, how much do you think could that be the inflation impetus that gives the Fed pause? How does that all play together?
It's funny that you bring that up. I ran into Liz Peek in the green room a little bit earlier, and we were talking about growth and how fast it will come as a result of the big, beautiful bill, the tax cuts, the other Trump policies like deregulation, and we've been saying that needs time. The foreign investment in this country as a result of the tariffs needs time to be able to play out. So I don't think it's going to be this growth rush all at once. I think it's going to be slow and steady. So I think that rate cuts are still warranted right now for the particular situation that we're in, which could be another reason why Powell goes a little bit on the slow side until Trump gets a new Fed chair in next year to see how that growth plays out and what the timeline and schedule will be. Also remember, the Fed does have some flexibility. They're fine in the past to say we made a mistake and we're going to change course, but they don't like to do it when it goes along with what Trump's narrative is. If Powell gets it wrong, and say we get 3 cuts by the end of the year, including 25 basis points today, and for some reason that growth materializes and it explodes quickly in the fourth quarter, Scott Bessent was saying you're going to start to see some of it. They always have an option of dialing it back if they need to. In terms of the cutting, that means raising the rates again. There's some flexibility there. Yes, I understand that that's, gives the market an uncertainty sort of message, which is we don't exactly know what's going on here and you don't want to do that per se, but you've got options. You're not, totally handcuffed.
I can't remember the last Fed meeting where the tightrope walk here was so so precarious. There's so many factors going on.
Isn't it sad, though? You would think we live in a transparent world where they should be transparent with us. But, like, the tightness of the chest is almost annoying to the American people. Like, we have an obligation. What data do we trust anymore? That kind of thing.
Well, and the fact that they have so much power, right? This group of really small people. Well, how many total people on the Federal Reserve Committee? 8, 10, 12? Have such a massive impact.
12 voting members.
12 voting members, decide interest rates for hundreds of millions of transactions every day.
I think, to me, that has always been the biggest piece. The Fed is too big. They matter too much for the economy. And we hang on Jerome Powell's words much more than we ought to. We'll see if we get some reform on that front. Meanwhile, Jackie, you're watching Eli Lilly. What's going on?
Yes, sir. And the stock is jumping today after the drug maker said that its obesity pill outperformed rival Novo Nordisk's in a recent diabetes drug study. They say their pill not only lowered blood sugar more effectively, but also helped patients lose more weight. And this has been the next leg, if you will, in the weight loss journey. We've talked a lot about the different shots and the different brands and companies that are working on that. But the pill, some people like that option more. It's more appealing to them to take a pill versus a shot. And so here we are.
It's so fascinating to watch it go back and forth. Like, who's helping who lose weight first? Lydia, you're talking about America and health tonight in your special. Like, this is central to that story. What role should it play?
Absolutely. And the big question now is, how are we using these drugs more and more? Are we using them primarily for diabetes treatment or prevention, or are we using them more and more for weight loss? And what does that say about the direction of the American health? And is that a good direction? There's some suggestions that we're using it more and more for weight loss rather than diabetes.
Right. Very interesting. We will continue to follow it. Meanwhile, coming up, President Trump in the UK and set to sign billions worth of business deals and investments. We'll tell you all about them next on The Big Money Show.